Good afternoon. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. So yes, finally some green after 2 days of losses, but low volumes and thin trade for now. Sensex did see over 500 points surge during the day, but ended with about 200-point gain. So yes, Nifty 2 surged nearly 200 points, but ended with 63 points above that 2800 mark. Sectorally, autos were the shining spot, while pharma and banks, they also fared well. However, what tanked were the metal and the realty stocks. We saw the 5 new listings, which were the major hallmark. Dam Capital with about 39% premium, Transrail with 36% premium, Mota Machinery with 149% premium, and the likes. But yet in large caps, they were the hit today because we saw muted action by FIs as well. Now, since majority of the FIs own large caps, so it was visible that the selling amongst large caps were quite end.
Right, as you mentioned, Lovisha, correctly, that it was a thin trading session. Volumes were low. When it comes to the markets, auto as well as pharmaceutical stocks gained in trade. Overall, from the day's high, we saw some bit of cooling. Sensex 225 points higher and Nifty higher by nearly 63 points. Advanced decline ratio, which was almost 2:1. End of the day, almost 1:1. As you mentioned correctly, there were 5 new listings today, and all of them did well, especially Mota Machinery with 150 points gain. If you talk about the overall volumes at the start of the Jan series, quite low. But overall, it was an encouraging trading session because on the trading side, as I mentioned earlier, pharma, auto, select real estate stocks were doing well.
That's right. But if we look at the top gainers and losers on the Nifty 50, well, definitely auto pact dominated the top Nifty 50 gainers. We saw that M&M, Eicher Motors, Tata Motors, all of them did well. Apart from that, we saw IndusInd Bank that also topped the list following the news of the MFI loan sale. So yes, apart from that, we saw Dr. Reddy's lab, which did well for the third straight session. However, on the contrary, we saw Hindalco after yesterday's gain, it saw profit booking, and Coal India, SBI, ONGC, Bharat Electronics, they also featured in the top Nifty 50 losers list. Yet in mid-caps and small caps, largely, muted performance. What are you making sense from the broader end of the markets?
So, broader in the market, we had stocks like Akums, Ajanta Pharma, GRSC, Caplin Point Labs doing well in trade. In fact, GRSC, this is one defense stocks which moved nearly 9% in trade. We saw some profit taking in Amber Enterprises after 2 days of run up. Today, some profit taking, 5% down for that one. Blue Dart, Godfrey Phillips, and Nugent Softwares are the other stocks wherein we saw some profit taking. But stocks like Caplin Point Lab, Jubilant FoodWorks, Obero Realty continue to hit that 52-week high. And since the markets are thinly traded or probably on low volumes, we have stock specific action which is probably driving the markets from here on. Probably next week we could see FI action return in trade. But yes, overall the volumes remain slightly lower because of less FI participation.
That's right. But let's break down some of the stocks that did grab focus in today's trading session. Well, first up is Tata Motors, one of the top Nifty 50 gainers, and the stock also rose over 1%. This came after Dam Capital upgraded the stock to buy from a neutral rating, and it shared a target price of 870 rupees per share, now which implies about 18% upside from today's high. However, the target price that is still below its recent peak of 1170 rupees per share. Now, what the analysts of Dam Capital are saying is that the recovery in the entire auto sector is visible in the fiscal year 2026, and they have upgraded shares of other companies as well, like Escorts, Kubota, and Bajaj Auto as well. So, Tata Motors comes along with that upgradation as well. While they do expect some of the challenges to stay in the next 1 or 2 quarters, normalcy is likely to return by the mid FY26 and FY27 completely. Then Tata Motors that hit a rough patch in recent months as well, primarily due to its JLR and of course the CV segment. But now that the JLR has also seen some branding of the logo, and we've also been talking about revival in capex in the second half, so that could also mean some good news for the CV side of the business, which has been lagging behind.
Clearly, and the report clearly mentions that in the first half or probably in the near term, we could see some demand pressure. but overall calendar year 2026 could be good for auto companies, especially later this year. We have the Auto Expo, which will be unveiling a lot of newer products, be it from Tata Motors or other auto companies. So we'll watch out for that space, especially the electric vehicles which come from the stable of Tata Motors. But today the clear newsmaker in trade was Ultratech Cement. We have a big announcement coming in. Today, Ultratech Cement informed the stock exchanges that they have invested close to 851 crores in Star Cement. They have bought nearly 8.7% stake via block deals. Limited set of investors and promoters sold their stake. It is quite important because the Adani Group and the Birla Group have been clearly looking to dominate the entire cement space, with Ultratech Cement clearly taking the leap with almost 150 million tons per annum capacity already installed, with 200 million tons being in sight by 2027. Now, if we talk about Star Cement, it is a prized asset. They are a debt-free company operating out of the northeastern state of Meghalaya. They have 7 plants in northeast, catering to not only the northeastern states but also West Bengal as well as Bihar, which are high growth states, mind you. Now, if you look at the cement volumes, northeast contributes lower, but given the fact that the recent development in infrastructure spend is expected to pick up in all of these northeastern states, West Bengal and Bihar, probably the volume growth would be quite better. In fact, right now the estimates or expectation is that Star Cement would do EBITDA per ton of more than 1200 rupees, and at the current market price the company is valued at 12 times EV EBITDA, which is quite reasonable in terms of overall acquisition. Post the news, both Ultratech Cement and Star Cement saw some good action, but probably with the market rally also fizzling out, we saw some profit taking in both of these stocks. But clearly, this is indicating that a lot of consolidation is happening in the cement sector, Lovisha.
That's right. We even saw and talked about Ultratech's recent acquisition of India Cements as well. So yes, clearly a consolidation taking place after the Adani Group's foray. But let's move on and talk about the next stock in focus, that is your IndusInd Bank. Well, the stock has been one of the worst Nifty performers this year, but today it managed to eke out some gains after the company announced plans to sell part of its microfinance loans. Well, the lender has put up microfinance loans which is worth about 1600 crore rupees for sale, and the reserve price for the same has been fixed at as 85 crore rupees. So this comes after IndusInd Bank has sharply increased provisions after bad loans from its FI segment made the headlines in the second quarter. So currently the gross NPA from the MFI portfolio at the end of the September quarter stood at 2260 crore rupees, and based on this, the loans that they have put on sale amount to 70% of the MFI NPA. So, despite this positive move that IndusInd Bank did embark on, DAM Capital came out with their note this morning and said that the lender will continue to face profitability pressures in the second half of FY25, and they expect that the bank's ROA is expected to remain in the range of 1% for the second half of the year as well. Yatin, IndusInd Bank, one of the top underperformers this year, and primarily due to their MFI loan book. But the street could be on a wait and watch mode before giving it a full thumbs up to the stock.
Clearly, and I think the MFI portfolio which is on the block, 1500 crores, it is important to see what kind of ARC sale realization is there, because I think they have put a reserve price of 85 crores. So, less than 1/10 of the value is expected to get realized, even if we assume there could be a bidding for this loan portfolio. So, yes, most of the MFI players, not only we have IndusInd Bank, but the entire industry is facing headwinds because of weakening rural incomes and probably the kind of loan disbursements aggression which has been seen over the last many years, that is now bunching up and creating a problem overall for the industry. And IndusInd Bank clearly after that quarterly number has seen one of the worst performance on Nifty so far for 2025.
Yeah, that's right. But let's move on to another stock in focus. That was your Jubilant FoodWorks. That hit fresh 52-week high after the company signed pact with Coca-Cola India to buy sparkling beverage portfolio. Now, this move would allow the company to serve Coca-Cola and other products at the outlets of its franchise restaurant chains, which includes your Domino's as well as Dunkin' Donuts. Under the terms of the agreement, Jubilant FoodWorks will acquire a portfolio of sparkling beverage products and select other items from the company's authorized bottlers as well. The company will also be carrying out marketing activities for these products in the ordinary course of their business. Yatin, the company's positive like-for-like growth in Q2 has set it apart in the challenging market as well. So, what do you make of the stock? Because it has been on a YTD basis, the stock has given modest returns.
Clearly, I think food inflation impacting their margins for the last couple of quarters, but I think the company is looking to innovate. They recently introduced select free deliveries via their apps. A lot of promotions recently to clearly boost their overall delivery sales, and also their in-house eating is also improving. Probably this Coca-Cola venture is not new. Earlier we used to get Coca-Cola in the Domino's takeaways as well as in-store dining, but the pact with Pepsi was done 5 years back, and with Bhartiya family, which is the promoter of Jubilant FoodWorks, entering into a bottling agreement with Hindustan Coca-Cola, has probably made them change the terms. Instead of serving Pepsi, probably you will get Coca-Cola at the pizza outlets. So nothing big in terms of event, but yes, market clearly expecting a better margin profile for Coca-Cola products. As well as moving ahead, the bet would be that since food inflation is expected to cool off, they could be better off in terms of margins for the second half of 2025 financial year.
Yes, all right. But yes, we did see a good start to the January series, but since it's a seasonally weak month, we'll see whether or not the an upward move is sustainable throughout the month as well. But with that, we have come to an end of this edition of the Closing Bell. Do have a happy weekend, and we'll be back with markets on Monday. For now, it's a wrap from Yatin and me. Thank you for watching.